So what is going on in the real estate market right now? This is my July market update video for King County, but the main goal is to just keep you guys informed on what is actually going on. What does the data show us? So we're gonna look at some statistics, talk about what they mean, and then just like I said, just kind of keep you guys informed outside of the headlines. Those headlines, their job is to create buzz, newsworthy headlines, and unfortunately negativity typically spreads a lot faster than positive. They get better ratings. So just want to set the record straight. What is going on? It's not all good news, believe you me. The first thing I have to share about is the decrease in pricing so far. So stay tuned for the rest of the video and we'll do our July market update. All right, guys, first statistic I have for you today is going to be based on average and median price point. This is, again, King County, all single family and condominiums. So the average price point is down 2% month over month, and the median was 4%. So I look at both those because they tend to be a little bit different, but they're kind of telling the same story. Just depends on if there was a massively luxury home at one point, then the median is probably more accurate. But anyway, long story short, that's not the stat that I think is most important. The most important stat is one that I've pulled over the last few months. It appears to me, based on average and median, that we are about 10% off the peak. So 10% median price is lower, 10% lower than it was in the peak. And that peak would have been listing in probably the March or April timeframe, closing May or April. Those were where we're getting, like, 15, 20 offers for sometimes 20% above listing price. So that was what I would call the absolute peak of the real estate market here this year in 2022. So statistically speaking, it looks like we're about 10% off that peak, but I gotta tell you, it actually seems like it's a little bit worse than that, depending on what area that you're in. So what I mean by that is certain areas that were very, very highly desirable were the prices that they were getting back in those March and April listing periods were just outrageous. They were already listing it high with comps. So the prices that houses were getting in that peak period, so March or April listing dates, in the really desirable areas, let's just call it Snoqualmie Ridge, Sammamish, Issaquah, Bellevue, those prices were just crazy inflated because they were listing it properly, right about the comps, which was just a few months before that, but they were getting bid up by about 20% on average at that point. So those numbers are non-existent anymore. So I would say, like I said, the data shows us that 10% is the amount that we've gone down since the peak. I would say it's more like 20% if maybe like your next door neighbor is the one that sold right at the right time, perfect house, perfect location. They may have gotten some sort of outrageous price that is really just not going to happen. It's not even going to be close to that. So it really depends, again, your specific market. So that's why you do need to know, if you're thinking about selling, what comps are relevant right now, which comps are just kind of thrown out the window based on time frame, location, all those things. But definitely, there's no getting around this first fact. Prices have absolutely come down. So this one kind of surprised me. So new listings, we actually had less new listings this month than we did last month, which is not actually typical. Usually July will have a little bit more than June, but it wasn't a huge significant one, but I think it was about 400. But if you look at July this year from July last year, it was almost 900 less. So there's actually, so even though everyone's saying, this is why the data is so good to look at, everyone's saying there's so much more inventory out there. That is a true statement depending on how you define inventory. As far as new listings go, actually July, not that many new listings compared to last July or even June of this year. Now, the months of inventory is a different stat, which I think is a better stat. That means how many active properties in the whole market are there right now. If no more new houses came out, right now we're at 1.9 months of inventory. That's the highest we've ever been for quite some time. In the peak of our seasons here, it was probably hovering at like about a half a month, 0.5 months of inventory. So we're almost up to 2 months of inventory. But again, that's not just because we got tons of new listings this month. It's because of these next two stats. Not every house that's put on the market right now is selling. So the pending statistics for this month are pretty similar to the month before, but they are still down quite a bit from last year, because June was also a pretty slow month. That's when this kind of slowdown really kicked into gear. It started before that, but anyway, there is a lot more active inventory out there, but it's not like all the inventory is just flooding the market. We are seeing, a regular flow of inventory for the summer months. That's very typical, but it's the buyer demand that has come down so significantly. Why is that? Most of you guys probably know. Interest rates, inflation, the Fed, there's so many things going on, but the buyer demand is very, very down right now. And so not every house that's coming into the market is selling. So that means that there's more houses that are on the market all at one time. Because remember, last year, or even earlier this year, every house that came on the market, like virtually every house, was going to sell. If it was a decent listing, it would definitely sell in the first week. Even the bad ones would probably sell pretty quickly within a month. So the fact that some houses are not selling the first month or two or three, it is changing the way that the buyers are shopping right now and changing their mindset on the purchasing. So like I said, first thing is interest rates. They are obviously much, much higher than they were back in January. But the good news is those are actually on the downturn right now. So the Fed's last meeting was the 28th of July, and they did raise 0.75 for the federal fund rate. But the market reacted to that pretty well. So the bond market, mortgage-backed securities, interest rates as far as a 30-year fixed mortgage went down a little bit. So we are actually in a better position now than we were at one point. We were almost breaching 6% for 30-year fixed. Now we're in the low fives, so that's good. So a couple other stats for you. This is the days on market stat. This one's at 13 days, which sounds like it's actually not that bad. But remember, days on market is only properties that actually sold. So the ones that are still sitting around, they don't have a stat to get into the statistic machine because they're not actually sold. So based on the houses that did sell, what was the average days on market? So it's kind of a lag measure. We're talking about properties that were listed before, already closed. Now they hit my July statistics. But it is going up. So that was before, it was less than a week. So it's definitely doubled as far as time on market. And it's actually in reality much, much worse than that because a lot of houses that have come out in the last 2 months haven't even sold yet. All right, so that wraps up the statistics part of this, but let's get to the juicy stuff. What does everyone want to know? What are the predictions? What's going on? What's going to happen the rest of this year? What's going to happen next year? So first is, I don't know. Very hard to predict. But I'm sticking with, if you are someone who watches my updates very regularly, you probably know my stance. But I think the next 6 months, or less than that now, but the rest of this year is going to be pretty slow. So probably the next 6 months up to the winter months, January, February, I think it's going to be very slow. We're going to see about the same amount of inventory keep coming to the market. No sort of panic, no crazy absolute crash. By the way, I wouldn't call this a crash. I failed to mention a couple other stats that I think are worth mentioning now at the top of my head, so I don't have them written down. But I said that we were down 10% since the peak, but super important to know, we went up 20% from January to that peak. So it went super fast, these crazy, crazy bidding wars. So it's not, that's not a crash if you ask me. So like, for example, if you bought a house December, January, just, whatever that is, 7-8 months ago, your house is definitely still worth more today than it was then. It's just not worth what it was in this crazy hot spring, which was the absolute peak. Right, so that's not considered a crash in my opinion. We are down significantly. It's just a volatile market right now. Prices went crazy, crazy high super fast. Now they're coming down quite fast as well. But I think that's going to level off. So I think that those comps that were the crazy prices are not really being considered as comps anymore. So if I list a property today, I don't care what the house sold for in April, right, or May. Those are the comps that don't exist anymore. They're irrelevant because those prices were inflated. So what I think is going to happen now is that I think that listing prices are going to be about what they should be for market value, getting us back to probably pre the craziness, so probably just January, February comps. So I think that we'll see a very small, if some small decline in prices from now until the end of the year, because I think buyer demand is still going to be slow, because I don't think interest rates are going to recover in this time frame. So my prediction, next 6 months, pretty slow. Buyer demand is going to be down. It'll be a little bit harder to sell a house, but it's still a great time. You're still capturing a great price compared to, obviously years ago. But I do think that we will rebound after that. My thoughts are that, hey, we're going to be in a recession here pretty quickly. So once we're in a recession officially and the headlines actually say we're in a recession, what they're going to try and do, as for any recession, is get out of the recession, right? So I think that at some point they will start lowering interest rates, and I think that'll probably be sometime in 2023. And I think at that point there's going to be actually quite a bit of pent-up demand for buyers, and it'll go back, hopefully actually not as crazy as it was before, but I think there will be a big uptick in the buyer demand because the house prices that are good, let's just say that this was next spring. Next spring, interest rates go down close to 4, something like that. But keep in mind, the prices of real estate in this time frame, if my prediction is correct, that we just kind of flatline, go a little bit down the next 6 months, the prices they're going to pay at that point are going to be much, much less than they were at the peak. So they're going to be thinking they're getting a good deal, which they are, and the interest rate went down. So I think that'll cause a lot of demand. So I think the market will recover quite quickly once interest rates go back down, hopefully next year. Again, no crystal ball. I have no idea if that's going to happen or not. That's what I'm thinking. Another thing I want to mention on this video is that I truly believe this is actually a great time to buy. Any time from now until the rest of the year, potentially into a little bit of next year. Because, you know, even though it's possible that prices might continue to go down a little bit, you have leverage right now. You can negotiate. The buyers that we're getting in contract right now, we are getting absolute steals, I'm telling you. So there's deals out there, and I don't think this is going to be a very long-term declining market. So you can never time the market to be like, I want to buy at the absolute bottom. Maybe February 16th is the absolute bottom of the market, but you can't wait around and wait. And once you get there, it'll be climbing back up. You won't know until it's too late. So long story short, I think it's a great time to buy in the next few months because I know we're getting a much better price for a property than we would have before. And like I tell my buyers, if you guys are working with me, you know, you get married to the house, you just get engaged to the rate. So even if rates are 5.5, let's say, when you find your house in a month and a half from now, if you're getting a price that was $100,000 less than the peak, that's a great deal. Interest rates will go down eventually, and you can refinance. You know, I can't guarantee that, and that might not happen, but obviously if you're getting a loan, you're qualified to pay that amount too. Also, lots of good loan programs. If you look at my last video, we talked about the 2-in-1 buy down. You can start getting seller credits to pay for a better interest rate. So we'll save that for another video. But lots of tactics and strategies that we are using to help our buyers secure a property and feel good about the payment that they're getting. So yeah, if you are a buyer, I do think it's a really, really good time the next 6 months to buy, because I think we're buying with a very good price. Interest rates are not very good, but I think that they'll get better later, and there's other options for that. Now, as far as sellers go, you know, same thing goes. You can't time the market either. If you could have timed the market, you would have sold in March or April, because that would have been the best case scenario for you. But since you don't know that that's going to happen, there's nothing you can do on there either. So I would base your sales cycle based on your own personal, you know, goals and what you guys are doing. If you're a person that's retiring and the date is November, sell it in November. I think it'll be a fine time. I would say I think it'll probably get better when interest rates go down, of course. So if you're like not in a need to, in a rush to move, waiting until next spring might be good, but it also might sell for a lot less than it is right now. Not a lot less, but it's very possible. So I think the selling part, as far as the timing goes, it's still definitely a good time to do it now because you're still taking advantage of a very good price. You know, if you're someone who bought the house 20 years ago, obviously you're getting a lot of money right now. I know it's hard to look at what some of your neighbors got 4 months ago, but it's still a good price right now as well. So it is still a good time to buy, or excuse me, to sell right now. The key for the sellers is that you really have to price correctly, you have to market correctly, and basically you got to do it a little bit differently and a better job than before. Quite frankly, you know, the last 2 years, outside of the last like 3-4 months, any agent could sell a house. At this point, that has actually changed. So you need to have a good agent who knows what they're doing to make sure that they get the top dollar for your house and actually bring negotiations into play, all those types of things. So very important to price correctly and market correctly, but still a good time right now. Feel free to reach out, you guys, if you have any questions about your specific neighborhood, your house, timing, anything like that. Love to grab coffee and chat or whatever. So hit me up. Thanks for watching. Until next time.